Welcome in. I am the Crypto Bull God, and this is all in the charts. If you appreciate the content, make sure to pop a cold one. Hit the thumbs up button, drop me a comment, and click the bell icon for notifications to know when I go live. I got a little Forever Lime. You know, I'm big on the flavored waters, as you know, and the Perrier, however the hell you pronounce it, I don't know. Has a deeper, more intense lime flavor. I'm big on the citrus. I really like it. It's almost like a key lime. Guys, I hope everyone's having a great week. By the way, Todd, super chats, as you know, are never expected, but always appreciated, kind sir. Kevin, welcome in. Glad to have you back on the live stream. I was reminded just before coming out before this live stream today how challenging at times it is, in all transparency, to come out here on a fairly routine basis in a market environment like this. Like let's keep things real for a moment. Not only is this boring, okay, but we've pretty much, if you've been here for quite some time, we've pretty much exhausted the majority of views that we could take a look at from a TA perspective, right? And what I struggle with in an environment like this is, what can I come out and really share with you guys that's value added? Because I don't want to come out here and just stream to stream. I don't want to come out here and regurgitate the same information if there isn't anything to update on. And to be honest with you, now I didn't have a lot of time before the live stream to actually put thought into what I wanted to talk about. But moments before going live today, I thought what might be good to do is to perhaps assess the health of traditional markets, because we need traditional markets to do well. We can take a look at the dollar index. I also... we looked at the total. We looked at the totals. Total 2, total 3, total others. Might open it up to comments or questions here. If you'd like me to look at a chart, we might take a look at Caspa. I'll just kind of see which direction the wind sort of takes me. I'm not, there really isn't anything exciting going on. I think what you're seeing right now is going to be the majority of how it appears and feels for the next 4 to 6 weeks. I really don't believe things are going to pick up significantly until the fourth quarter. I think once we get in, and this is part of the discussion from yesterday, once we get into that fourth quarter, I think the fourth quarter and the first half of next year are going to be pretty fucking explosive. I think those 9 months have the possibility to provide us some significant appreciation in this market. But between now and then, it's just going to be a boring period of time. Don't forget, guys, we kind of touched on this before many months ago. It's been a little bit since we've spoken about that. But the concept of this Pareto distribution, where essentially it's an 80-20 distribution. Being a statistics person, I really appreciate this comparison. But essentially what you're talking about is that 80% of the gains that you're going to see in this market will occur approximately within 20% of the cycle, right? So there's only that 20% time window when you're going to see the mass amount of your gains. That other 80% of the time, okay, so to put it in context, if a cycle was 100 days, 20 of those days, you're going to see 80% of your returns. The other 80 days out of the 100 days, it's going to be boring as fuck, okay? Or at least not as eventful, right? So to quote Raoul Pal from Real Vision, we're getting closer and closer to the banana zone. We're not there yet. And I don't think that it's going to ensue until the fourth quarter. Okay, Juan, welcome in. Good to see you. So I think we just need to ride this thing out in August and September. Stay vigilant. Stay on top of the charts. Keep in mind a lot of the key high time frame views that I've shared with you, things we're going to be looking for, but very much anticipating the fourth quarter to be a very big fourth quarter for us. What the hell is a banana zone? I don't know if I want to go there. No, no, no. No, no, no. Get your mind out of the gutter. The banana zone, look it up. Raoul Pal. I don't know if you're trolling me there, Juan, or you're being serious, sarcastic, but the banana zone is when the trend literally looks like a banana. It slopes completely up because that's your 20% period of time in which 80% of your gains are made. So that's essentially what it refers to, and you can go to Real Vision for more commentary on that. Guys, you can see we're doing exactly what I said would be healthy to do, right? We have a red day today. This is the 12-hour candle, or the 12-hour chart. Let's just focus on price action. So we can see based on price action, we're just hovering in between this 61.8 and 56.5 level. That's all we're doing. And this is going to be boring AF until we can get out of here, right? The next main zone, conquering 61.8, is going to be a big win for us, but I really want to start getting up to this 63.8 to $68,000 level, okay? So we just got to remain patient and allow the price action to really print for us and then help to formulate our views moving forward, and just remain patient, right? Let's take a look at some charts. Perhaps, like I said, I'm going to see where the wind takes us, and feel free if you want to drop a chart. If you're like, I haven't seen DigiByte in like 6 months, I'm a Harmonaut, let's talk about Harmony. I don't know who's here, but feel free to drop your TA questions in the comments. Let's take a look at the dollar index. I mean, the dollar index is doing exactly, my yawn is very reflective of how the market is right now. The dollar index is doing exactly what we said it would do. It's experiencing weakness. We have lower highs coming in here. I'm expecting once we get down to this 100 area as a psychological level, expecting that to break, and we're going to go significantly lower. I think one of my main targets down here is around this 94. I'll have to revisit. I believe 92 was the main area I was targeting for the DXY to bottom at. But we could see something significantly lower. We could backtest this trend line that's been in existence since 2018. If we put this on a... let's have some fun. Let's have some fun. If I put this on a 2-week chart... let's see here. You can see what I'm doing is I have a touch right here. Let's make this a little thicker. That's what she said. I have a touch right here, a touch right here, touchy, touchy, touchy. So if we came down to backtest this trend line, theoretically, if the dollar bottomed, somewhere in here in, the middle of 2026 or 2025, yeah, you could, if the dollar bottoms sometime in mid to late 2025, you could find a bottom right in that 91 to 92 zone. That's what I would be targeting. So we'll have to see. And again, this is very bullish if you're invested in the stock market, as that DXY, it's all part of this liquidity cycle game, guys, if you study it. As the dollar index weakens, okay, that's good for anything that you're holding that will appreciate in value relative to that. You're talking about the stock market. You're talking about the cryptocurrency market. So it has an inverse relationship, and it's one of the things, again, I attempted to explain some of this on a Spaces with Peter, but I think Peter is so entrenched in his views that he, I really don't think you could share anything with the guy. He has his views, and again, I respect him and his libertarian views in many regards, but when it comes to cryptocurrencies and his current views on the market, I don't agree with him. Interesting. So if you're so inclined, charting basics, 1 or 2 lessons a week during the boring market stretch. That's not such a bad idea, to be honest with you. One of the things that I had contemplated doing for the channel, I have lots of thoughts for the channel once I can actually have more time to invest into the channel. If CBG transitions to part-time, when CBG transitions to part-time work, CBG will have more time for the channel. But I think it's an interesting point you raised, because one of the items that I have thought about is putting together, it would be paid. I mean, I would have some sort of a paid service put together. You pay a flat rate, and you get access to some educational videos that really teach you how to properly read a chart. I've thought about doing that, but in terms of boring weeks and putting together some lessons, I like the idea. So I'll put some thought into that. Because, again, when we come out here during boring times like this, I think the important thing to do is to keep everyone engaged, right? So on the one hand, I'm being very transparent and honest with you. I mean, this market is boring as shit right now, and it's not going to get exciting until the fourth quarter, in my opinion. But we could be proactive and maybe study some of the basics. So I'll put some thought into that. Maybe as early as next week we'll begin doing that, because I don't anticipate September to be a monumental month, and we're already halfway through August. So that's the DXY. Let's take a look at anybody here in Tesla. Is anybody invested in Tesla? Of course, the NASDAQ. The thing we need to understand about the NASDAQ, which is one of those major indices that we assess for relative health within the stock market, that NASDAQ is mainly comprised of a few companies. It's an index. It's an indice of certain. It's weighted by market cap, but it's an indice of certain ticker symbols. One of them happens to be Tesla. So Tesla right now, 5-day chart. Why the hell do I have this on a 5-day? That can't be right. Let's put this on a 2-week, maybe? This was on a 2-week. Doesn't make any sense the way this line is drawn. Is this on a monthly? I'm trying to figure out why I have those lines drawn the way they are. Yeah, it looks like a monthly. So right now, we got a lot of downward resistance here. We still have this upsloping line. Really, for Tesla, what we're trying to do is get a monthly close back above this 50 simple moving average, since we lost it on the monthly. Really would like to see it push up towards 240, that 240 level. But you can see right now, we got these lower highs coming in. These are 3 main lower highs that I see on a high time frame view. But the bulls are trying to battle back here because we have higher lows coming in. So what we don't want to do is roll over and negate the higher lows that are coming in. So as long as we can, honestly, as long as we can remain above 140, which is a significant amount of downside, as long as we can stay above 140, we're good to go. The bottom may very likely be in, but you could even see prices come down to this 160 level. We'd be fine because you still have higher lows coming in. But want to reclaim 238, 240. And then start looking for that $300 level to get pierced. Once you see Tesla above 314, just looking at this chart here, once you see Tesla above 314, I don't think it's going to take very long to set a new all-time high. Let's take a look at the Dow Jones Industrial Average. This is perhaps the oldest index, I believe. I believe it is. I think the Dow Jones is the oldest index. I mean, this is the one that goes back into, I'm not going to even say the year because I'll be wrong, but I want to say before the year 1900. Where does this go back to? This goes all the way back. Look at this. The Dow Jones all the way back here in 1896. That really wasn't that long ago. If you guys think about it, a little history lesson here. I'm going to do a little math for you. It's the year 2024. It was only 100 years ago that it was 1924. And 100 years is essentially the lifespan of a person, 1.2 people. 1.2 people ago, it was 1924. Pretty fucking crazy when you think about it. Dow Jones Industrial Average. Let's take a look at price action here. Of course, one of the things that I had pointed out here is negative divergence in the RSI, which hasn't cleared itself. You can see it anytime, speaking of lessons, like Todd had mentioned, anytime you see negative divergence on the RSI on higher time frames, so long as there's enough price data, okay, there's enough historical data, it is a much stronger signal than finding it on a lower time frame like a weekly or a daily or a 3-day, right? A 3-month bearish divergence on the RSI is no bueno. That's a strong signal. And it's something that will eventually more than likely play out. So you can see on the 3-month, we've broken above this bearish divergence. But the bearish, just because we broke this descending line right here, guys, doesn't mean that the bearish divergence is negated, right? We broke it here as well, technically, if we had it drawn like that, right? But the important thing to keep in mind when assessing this is it's bearish divergence because as the stock market has continued to go higher, as the Dow Jones Industrial has continued to go higher, the RSIs have come in lower and lower and lower, expressing weakness behind that move up, okay? It's not as strong a move up. So it'll be interesting to kind of see how this plays out. But right now, let's go to a smaller time frame. Things are looking pretty good. No complaints on the Dow Jones. I mean, we're not far away from all-time highs. We're about 2.5% away. We're sitting here at 40,000. And again, just as a refresher for everyone who was, scared out of their mind last year, which I tried to keep people in the game and say that it was a shakeout. Remember, I remember being on the phone with my family, actually. Remember, back here in this time period, this was a correction that ended up resolving itself once the monthly touched this 50 simple moving average. I mean, we topped out at 36 and went down to 37 and went down to 28. We're now sitting at 40. It's why, one of the things I was thinking about yesterday that I wanted to share on the stream that I had lost track of is if we're being very honest with one another and having an honest conversation like we always do, at least on my stream, most people fail and fail miserably at trying to time the market. Okay, most people. And as you get more granular and you get into day trading, that's when the failure rate really kicks up. It's just, you'll go on crypto Twitter, you'll go on YouTube, and you'll hear all these success stories, and people make themselves sound very successful. And not to say that there aren't success stories out there, because there are. But I think you're diluting your perspective if you think that you can quit your day job and begin day trading, or you can really time this market. The only way to become more proficient at investing and timing the market, because at the end of the day, I'm timing the market, right? I'm not planning to buy crypto and hold it for the next 10 years. I am planning to sell at a certain point based on my sell strategy that I was totally crystal clear with you guys on that I'm using. But the only reason that I can feel convicted on that strategy is because I've spent a lot of time studying this market. Most people, the noobs, the herd, okay, the normies are essentially their best proven ticket to wealth creation is to just continue to buy, right? Just buy, because history says the stock market goes up. They are just not financially savvy enough and don't have the inclination or time or knowledge to time markets and trade and get in and out. Just not smart enough. They don't. And the market is hard enough as it is. So most people would benefit from not panicking, and literally, you don't want to buy a falling knife, but it often is advantageous to buy into fear, right? Thumbs up, by the way. Everyone new tuning in would appreciate the support. So this is a very small channel. It has been for some time. And the more that you choose to engage with me and just hit the thumbs up button, it's a little action, and it really does help me out as a content creator. So the Dow Jones is looking very healthy. I have no concerns over the Dow Jones Industrial Average outside of that high time frame bearish divergence on the 3-month view. Let's take a look at the NASDAQ. We were just taking a look at Tesla, which makes up a big portion of it. So one of the things we have to one of the things we importantly should recognize is if we know the predominant companies that make up the NASDAQ, which are Tesla, Google, Apple, Meta, Apple, Google, Microsoft, Nvidia, Tesla. You know, if these companies are predominantly making up that indice, the NASDAQ, then our assessment in terms of how those charts look and the relative health will directly correlate to what we can anticipate within the NASDAQ. That should make sense. So to give you an example, if those five companies, and I don't know what the percentage is, if those five companies, Apple, Google, Microsoft, Nvidia, and Tesla, comprised 80% of the NASDAQ index, it is heavily skewed towards the success of those five companies. So if we can understand what's going on in those five charts, it should inform us what's going to happen on the NASDAQ. It's the same way, it's the same thing when we look at the total cryptocurrency market cap chart. That total cryptocurrency market cap chart is heavily skewed towards how Bitcoin and Ethereum look. So the performance of Bitcoin and Ethereum is going to, in large part, dictate how that chart will play out. Should make sense, right? And if you think about it on the total crypto side, Bitcoin dominance is at what, 57%? Ethereum dominance, what's Ethereum dominance? I don't even know what it is. Okay, Ethereum dominance is at 16%. So 16 plus 57, I'm not good with math. That's 73%. So 73% of the total cryptocurrency market cap view is skewed. That's why sometimes I don't like looking at the total chart. Unless we're talking about, a lot of times I don't like looking at it because it's just heavily skewed towards Bitcoin and Ethereum. But anyway, let's take a look at the health of the NASDAQ. Of course, we've had this huge plummeted in price here, but ever since then, we've had a nice sharp recovery. Again, a conversation that we should revisit at some point shortly here. This time window between March of this year and October of this year was something we projected out long ago, back in 2023, of when the Federal Reserve would begin cutting interest rates. Now, I want to probably dedicate an entire live stream to talk about this whole cutting the interest rates action that's going to probably take place in September and how we should interpret that. One thing I do want to share with you ahead of that discussion and how we should look at the cutting of interest rates and consider the relative timing with toppings of markets. As soon as they start cutting interest rates, please understand that does not signal that you should be selling anything. That's not what it's signaling. But this is the time window where they should begin cutting interest rates no later than by October. It's just based on recent history. So on the NASDAQ, it's good to see here, first off, one of the basic things that you want to see on any chart, you want your moving averages to work in chronological order, in descending order. So blue is 10, yellow is 20, purple is the 50, and pink is the 200. So we have the 10, 20, 50, 200, which is great. We don't have any of these faster period moving averages crossing below the slower period moving averages. Example, a faster period moving average would be a 10 as compared to a slower moving average, which would be a 20. We don't have the 10 crossing below the 20. We don't have the 20 crossing below the 50, and we sure as shit don't see the 50 crossing below the 200. So just from a moving average perspective, right away, what that signals to me is the relative health of the trend is good, and it's up, right? Else the moving averages would look different. So that's good. Price has rebounded and is above the 20. I mean, ideally, what I'd want to see this week for the NASDAQ, I'd want to close realistically anywhere in between this 10 and 20. So somewhere between 19,400 and 18,800. We're at just over 19,000 right now. So NASDAQ's looking good. MACD looks, depending, if we get a good week coming in this week, what you will see is a cross up on the stochastic RSI, potentially at or above 20. RSI is in relatively neutral standing. But the MACD, what I'll be watching for is that MACD to begin to flatten out and then want to curl up in the successive weeks to come. So looking good, looking good. We'll skip the S&P. The me see what questions I have. And I haven't been paying attention to the comments. My apologies. What's up, Track? Good to see you. Good morning, kind sir. Jeprox, I would be happy to give a Caspa update. Let's take a look at Caspa next. Good morning, DT. It's nice to see you. I'm sure you're having a black cup of cafe this morning. TMI, James. TMI. I just got out of the bath. You take baths? I mean, I guess there's nothing wrong with that. I can't tell you the last time I took a bath, but yeah, to each their own. You're reminding me of a radio talk show host that I listened to at sports radio. Okay, let's take a look at Caspa. We were going to look at it anyway, but I know I have at least one fellow fanboy in the comments here. Let's take a look at the weekly. One of the things that I've tried to share, so in general, if you've been following my content for a while, where I feel the value is in helping others is most oftentimes simplifying things and keeping things very high level and simplistic. Again, if I wanted to, okay, if I had the intention to, I could come out here and get a lot more granular and make myself sound smarter than I actually am, right? But if I'm doing a good job as an educator, then what I'm going to do is give you the key points. It's going to be easily digestible, and you'll find it value added for your viewpoint in education moving forward. So in this case, very simplistically put, anytime you've seen price action close below the blue line, it is a massive buying opportunity. What's the blue line? Well, first off, we're looking at a weekly chart on Caspa. And secondly, the blue line is a very basic standard moving average that you would pull up on any chart. Most chartists pull up. It's a 10 simple moving average. So this moving average plotted on this chart is just giving you an average of the prior 10 weeks price action. That's all it's doing on a closing basis. And it's plotting a line on here. Anytime price action begins to deviate below the 10 simple moving average, opportune time, okay? You can see if you would have, bought here at a half a cent, it would have been an awesome time to buy. If you would have bought anywhere in here, okay, around 1 to 2 cents, opportune time. Temporarily here, opportune time. We got under it here, opportune time. We got under it here, opportune time. Once again, we are underneath the 10 simple moving average. Now, I had shared with you guys, I forget what the price point was, but I ended up buying even more Caspa than I thought I was going to be buying. And price levels, I want to say it was up in the, I'll have to check. I don't know if it was at 15 cents or 16 cents or 17 cents. I don't know. But again, if your view, here's the thing. If your view is similarly aligned to my own, which is one, we're going to see massive upside between the fourth quarter and the first half of next year. And secondly, on this specific asset, you see a strong argument and potential for this thing to break into the top 10, worst case scenario in my opinion, top 15. This thing's going, it's just math, like I've said before. This thing is going significantly higher. From current levels, a 20x plus is not out of the question. A 20x plus puts it at a $80 billion market cap plus, which would have it sitting probably outside the top 10 based on where everything will land. So again, that's the lens that I look at this through, right? So the fact that we're sitting underneath the 10 simple moving average of 17 cents, it's a great buying opportunity, historically speaking. If we get into the other thing you can do, and I've shared this before, the other thing you can do to remain honest with yourself in terms of the relative health of the altcoins that you're holding is you can chart them against Bitcoin, Ethereum, and Solana, those three main altcoins, right? Funny. Binance should be included in there, but I guess we never really do that. I could chart it against BNB, but what happened to my chart? What did I do? There we go. So this is the Caspa BTC chart. So if you look at the actual, what I'm doing here, you can see I'm taking the USD, dividing it by the USD Bitcoin price, and then I'm multiplying it by 100,000. And the reason I multiply that ratio by 100,000 is because if you didn't, you would have 17 cents divided by $59,000, which would make these values to the right here, you wouldn't be able to read them, right? So I'm making them more sensical. But you can see here we've been, in general, the trend is up. First off, this is what you would want to see on an altcoin. If your chart is going up and to the right on an altcoin pairing chart, you're fucking winning. If it looks like Casper and it's going down to the right, you're fucking losing. It's really that simple. I mean, it's honestly, it's mind-numbing that people can't get this to me. Or at least they don't want to see it. It's just facts, okay? It's why I love numbers. I'm for everyone out there, I am a Capricorn. So I'm a very logical, intuitive person. So if something isn't jiving logically, I can't make sense of it. So now you could say to me, well, hey, CBG, yeah, we've been going up, but look at these lower highs coming. Isn't that bearish? No, you have to look at the overall trend. We came up here, and now we're just sort of consolidating in here. When would I get bearish on this chart? When I would get bearish on this chart is if you saw candle body closes go below this line. This is my line in the sand. I can very easily tell based on this chart where my line in the sand would be. It would be right here. Let's extend this out. Okay. We'll make it a different color. I don't suspect we'll be revisiting that, but there it is. So if we started to get candle body closes going below here, so you'd have to travel down. Caspa would have to depreciate against Bitcoin from current levels by approximately more than around 50%. Okay, again, there's a possibility for that. There's certainly a possibility for anything, but it's not very likely. Okay, very, very strong chart, very, very much in an uptrend. And this is the other thing I would communicate to you is because you have there are people invested in this project purely based on the TA, purely based on the fundamentals, or a combination of both, which is the case for me. So what you baked into that statement, okay, let's take apart the first set of people. There are people invested in this project, or at least own some of it, because of just the technicals, okay? So if we believe that a human emotion is baked into all of these charts, and we believe that people are actively trading, buying and selling this thing, and it's exhibiting a very bullish structure, what do you think is going to happen once bullish momentum picks up in the market? Your biggest altcoin pairing bullish chart like this is going to run the hardest, if not the hardest, be one of the harder runners. It's why I say ride your winners, guys. Don't think if you have an extra $5,000 to invest in the market, don't think because your asset is down 97% in the past couple years and it's a low market cap that it has to go up and it's going to outperform Caspa. That's a loser's mentality. That's somebody who's naive and doesn't understand what they're doing. You've got to ride your charts. You've got to ride your biggest winners. I don't know how else to articulate it. So if we take a look at the Caspa Ethereum chart, now because Ethereum has been underwhelming, this chart should be very strong. Yeah, so you can see we've broken out of the downtrend here. We've technically created a higher high here relative to here, but we need to, this is the level when shit will really start to break off. We don't have too much further to go from there. It looks like about 25% upside to go. So again, this is what you want to see on a pairing chart. We have a general uptrend. We've had a period of consolidation, but notice how this descending area of resistance here has been broken, and we're very close to getting to all-time highs. Caspa Solana, now I will say of any of these pairing charts, The Caspa Solana chart will be the most interesting to see how this plays out. There's a lot of people out there that have varying views in terms of just how hard and how high Solana is going to go. It's going to be interesting to see if Solana could get up to that $1,000 range. Where are we sitting right now? Let's see. Solana's sitting at 143, just doing some basic math. That's like a 7x, which just that alone I think is very possible. What market cap would that put it at? You know, that would put it at close to a $500 billion market cap. So not out of the realm of possibility. Not out of the realm of possibility that you could see Solana at $1,000 or maybe even a little bit more. But then the question you have to ask yourself, and I'll bring it back to Caspa. If you think Solana could do a 7x, and if your relative view on Caspa is extremely bullish, and it's been appreciating in value against Solana. Now, again, we've entered this consolidation phase. I've signaled to you where I'm interested in prices getting to on this chart before I'm calling some sort of a significant bullish turnaround here in the shorter term to create new all-time highs. But you've got to ask yourself, if this chart is going to break to the upside, as I suspect it will, eventually up here, just how much harder is Caspa going to run relative to Solana? So if Solana could do a 7x from here, could Caspa outpace it by 2, 3, 4x? Quite possible based on the chart, but we don't want to get ahead of ourselves. We've had a nice uptrend in this Caspa-Solana pairing, and we've entered a massive range of consolidation here. We've essentially been consolidating since September of 23. So we've been consolidating for a year now. So we need to get up into this area before we can start really theorizing just how high we can run. Keep in mind, this thing is still not listed on any tier 1 exchanges. It's not on Coinbase. It's not on Binance. Of course, Binance entered a mining pool, so they're clearly accumulating Caspa in anticipation of offering it. It's just a matter of time. But I think the Binance USO, the former US Binance, somebody that used to work there, I have to look him up, who is extremely bullish on Caspa, said something about one of the reasons it's just taking long to list that project is just from a technology standpoint. Just it's a different animal, it's a different creature. So just having the infrastructure to actually offer it. So we'll see. But yeah, so Caspa, again, until something changes in the chart. Now, if something were to happen here, I don't want to knock on wood, no superstition here. If something changed in the chart, I'll just leave it at this. If something changed in the chart and all we were doing was creating lower lows and lower highs, yeah, I'd be bearish on the chart. But technicals are just monumentally strong with the thing. I don't know why you wouldn't want to own some of it. Let's see. Second coffee. Oh, man. Once you get into that second cup of coffee, that's when shit hits you. Like, you're feeling good, I have a mug that I think maybe I probably was inspired by my father got this for me. I don't know if it was from both my parents. It came from both my parents, but they got me a coffee mug and it says, what the hell does it have on it? Oh, now I forget. Hold on a second. What the hell does that mug say? Yeah, so I'm a firm believer in coffee. I'm a firm believer in coffee. So the mug says, wake up, drink coffee, poop, and be awesome. So, well, it says be awesome, not and be awesome. But it's the fucking truth. All right? It's the unspoken truth. Say, is it Sui or Say that Raul is seemingly integrated into? Will you keep working after this bull run and you cash in on most of your... So, Raghorn, what I would say, I will give you 2 quick responses to that. And I appreciate the question. First off, I have no plans of leaving the live stream no matter what happens next year. The second thing I would say is I'm not putting the cart before the horse. I can feel convicted on things all I want, but things actually have to materialize in the market. I have to be relatively correct to even be in a situation where I could fathom what you're talking about. So I don't allow my mind to really think about that. I'm focused on staying vigilant within the charts, knowing what my sell strategy is, and then capitalizing when that event gets here. And then when the dust settles, I'll evaluate things. But I just don't I don't want to get ahead of myself. You're asking a short-term question on Bitcoin, if it's going to go up to 50. I don't know. I don't know. I don't know. We're not the channel. On the one hand, I appreciate the question. On the other hand, I'm like, why ask the question? Does it matter? Can I ask you a question? Unless you're day trading this market, does it matter if we know the answer to if Bitcoin's going to hit 63,000 or 56,000 first? No, it doesn't. That's not the question you should be asking yourself right now. You have to have a high time frame view. We could wick somewhere in here and then shoot up eventually. We could never touch this area again and then eventually make our way up. I don't know. Like, literally give me a dartboard. I'll throw a dart and I'll let you know. Or give me a coin. I'll flip it and let you know. Let's take a look at... I always confuse Say and Sui. Let's take a look at Say. Appreciate the question, James. I was asking for questions, so I do appreciate that. Let's see what we got. And if there aren't any other good questions, this might be the last chart we look at. So I don't know the specifics on this token unlock occurring tomorrow. What I can tell you, I'll see if it's a good question, Juan. What I can tell you is that we're in a general downtrend. Okay, a lot of wicks in here, trying to pick the most relevant. We're in a general downtrend. This is not really, since we topped up. I mean, this is like a lot of the altcoins, though, in all fairness. So we're in a general downtrend. I really don't want to see prices close below this green line. Now, it's one thing, you could get a wick down here, but if we start getting candle body closes below this line, because we haven't seen a candle body close below that line since back here, you're inviting the opportunity to run all the way down to 17 cents. So as long as on a weekly closing basis, we can maintain price levels at and above, weekly closes at and above 25 cents a quarter, then what I would suspect is, one of 2 things, okay? We're either going to continue going sideways and eventually go up, or we'll break up and back test and then continue on our way up. But keep in mind, if we get a candle body closes below 25 cents, it opens up the opportunity that we could go, we could come down here, right? It's not the no-no zone. It's not the no-no zone. The no-no zone on Sui would be all the way down here at 9 cents. We'd have to get below 9 cents. And there's only one project that I can recollect that is in the no-no zone. Juan, I feel like this is this one ticker we've looked at 5,000 times, but I could be wrong. I could be completely wrong. 2017. Boy, I bet you that's an interesting looking chart. What do we got? I'm all out of my Cavassier. That means it must be the end of the show. Anybody know what that line is from? I bet you don't. I'm all out of my Cavassier, and it must be the end of the show. The ladies, man. Saturday Night Live skit way back in the day. What is this? AKT? No, we've looked at this. Akash. Akash. I know we've looked at Akash. Akash. Really? We haven't looked at Akash? For real? I feel like we have. Well, I'll try one more chart, and if it doesn't come up, then I'm assuming we haven't looked at this. Okay, we haven't looked at it. All right, so let's take a look at Akash. Every time I hear the name of this token, it reminds me of, there was a kid I went to school with, and his name was Akash. Like, his name was literally Akash. So it reminds me of him. He was in a... this is really going to date me. For those of you guys who don't know how old I am, I'm 42. This is really going to date me. So the first computer programming language that I ever took, it was not Visual Basic. It was Quick Basic. Quick Basic was the computer programming language before Visual Basic. Just a little FYI. And he was in that class. Let's take a look at Akash here per the request. So similar sort of story. You could paint this descending resistance a couple ways. Don't overcomplicate your chart at the end of the day. You could go like that too, but I don't know. Don't overcomplicate your chart. That's my opinion. Just learning from charting over the years. Here's a major area of price confluence. Now again, notice I'm keeping this on a weekly. The more, again, we have a decent amount of price data here, and the more we can keep this on a higher time frame, the cleaner our view will look, and the more easily digestible the whole process will be as it pertains to discerning what's going on. So this is the main range that I want to hold. Okay, if we're going to hold the line, it's this range. It's between $2.20 and $1.70. Now, that doesn't mean, to the point that was expressed here, we couldn't see a volatility wick enter in or below that level, but from a candle body closing basis, I don't want to start going below 220. Okay, I don't want to go below 220. In terms of areas of resistance, I mean, there's a pretty obvious area. Draw that a couple different ways. Right about there. There's another area right about there. And of course, there's the all-time highs, but I'm just going to give you kind of the three main areas. So we have a descending area of resistance here that we need to get above. Beyond the descending area of resistance, there's kind of three main zones that we want to watch to see how price interacts with it. $3.65, $4, and we're going to call this 20 cents, round it, and $4.80. So 365, 420, and 480. Those are your three main areas of resistance. And then when we go down to you can see this RSI needs to turn around. It's putting all these lower highs in. We need to turn that thing around. Stochastic RSI. MACDs, again, like a lot of these charts right now, the MACD is trying to find its bearings. On the way down with this correction, it's been like a plane that's sort of nosediving, and it's trying to level off. That's a good analogy, actually. You have a plane that's nosediving towards the ground, and it's trying to find its bearings and kind of level off, and then begin to accelerate back to the upside. Okay, that's essentially what the MACD is doing. If we go to let's just go to a lower time frame, see if we can ascertain. I love that word for whatever reason. How many times on this live stream do I use the word ascertain? Ascertain. I'm trying to ascertain from this chart any bullish divergence. So I do see some bullish divergence. You see how quickly I knew where to go to find potential bullish divergence? So this is a 2-day. This is good to see. If we go to a lower time frame, one of the things we can do to kind of gain an insight on the chart is here's how I would articulate it. Go to those high time frames to the extent possible that there's price data. go to those high time frames and really gain an appreciation for how the chart looks. That's the easiest and cleanest way to do it. And then you can start going into your lower time frames to get clues, breadcrumbs, as I quite often say. You can get clues in terms of how the chart looks at a lower time frame view to give you an indication of what you might anticipate to play out in the higher time frame view. Because keep in mind, if we're bullish on the low time frame, that the bullishness in the lower time frame begins to bleed over into the high time frame. So in this case, on a 2-day chart, which is a lower time frame, you can see there's bullish divergence here. Why do I say that? The reason I say that is because you clearly have a higher RSI reading coming in here, although price is going lower. Okay, price is going lower. So we have bullish divergence that may play out. Now, this isn't a guarantee of anything. You should know that if you tune. This is not guaranteeing anything. This is literally just being educated enough to recognize a pattern that has a high likelihood of potentially playing out. That's all this is. So that's a good sign. Good sign on these lower time on the lower time frame, the 2-day and day. I see some bullish divergence. I think Thava, I appreciate it. We're gonna stop it here because we've been going for 50 minutes. I will be back tomorrow. If I remember the ticker symbol you asked about it, I'll chart it. Chances are I'll forget because I don't know what the hell that is. So make sure you tune in tomorrow. Tomorrow will be TA Q&A, so I'll answer everyone's questions, and that's all we're doing. If there's no questions coming in, I'll awkwardly stare at the camera until people ask me questions. It'll be a fun time, all right? So until next time, everybody, let's all spread awareness. Let's all spread awareness. We shouldn't be spreading anything else. Let's all spread awareness, and let's carry the education forward. Take care.